Welcome back, listeners. Today we are dropping another special episode of the Code Story podcast as part of our series entitled Beyond Bots, the real impact of AI on financial services, brought to you by our friends at Entropy. As a reminder, Entropy is the most accurate financial data standardization and enrichment API. They can take in any data source, any geography, and understand/enrich a financial transaction in milliseconds. Made for developers for fast, easy implementation. Check out their product at entropy.com. Well, today I have another special guest on the Code Story podcast, Daniel Jordan, data science manager and also product manager at Wayflyer. Daniel, thank you for being on the show today.
No, thanks, man, for having me.
Absolutely. I'm super stoked to jump into Wayflyer and how you and Entropy work together and talk about a lot of fintech and a lot of AI. But before we go too far, tell me and my audience a little bit about you.
I'm from Dublin, Ireland, by the coast, so I love to swim and kayak. I'm a big rugby fan. I've got 2 dogs, so I spend a lot of time with them. And then, other than that, just hanging out with my friends and family, traveling, that kind of stuff. I'm a very normal guy. I joined Wayflyer 2 years ago as a data science manager. In the last 2 years, I've kind of worked between data science and product management internal to Wayflyer. Before that, I worked for United Health Group in their essentially health tech R&D department, where we focused on predictive analytics and natural language processing for medical charts, doctors' notes, all that kind of stuff. And then previous to that, I worked in consulting in banking.
Okay, well, let's dive into it a little bit. Tell me in the audience what Wayflyer is. Tell me about what the company is and the product does.
Wayflyer is a fintech company where we primarily fund e-commerce businesses. Within e-commerce and within retail businesses in general, there's a real need for working capital. So if you can imagine, you sell fitness clothes and you place an order every month or two from your supplier. Maybe it's in India, maybe it's from China. You have to pay for that inventory up front. And then you might not sell it through your store for another month or two after it gets shipped over, and then you have to clear it, market it, etc. That working capital is really tough for growing e-commerce businesses and growing retail businesses in general. So what Wayflyer does is we fund that working capital. We give customers what's called a merchant cash advance. So we advance money to them in return for future receivables. So future receivables means the money that they make from selling their inventory. And what's really interesting about merchant cash advance, especially how Wayflyer do it, is that we do it on a proportion of your daily revenue, essentially. So if you were to sell $100 worth of goods today and we were doing a 10% remittance, we would take $10 and you would keep 90. What's nice about that is that your remittance or your payments back to us is proportional to how much business you're doing. If your business slows down, we'll take less. If your business speeds up, we're only taking 10%. That's really good for businesses that are growing or have uncertain revenue streams. And it means that we are like a partner with you rather than we're not like a loan shark, or we're not going to put pressure on you to make you pay us back if something's going wrong. We want you to succeed. Like, we want your business to grow. So it kind of changes the dynamic typically that you get when you've got a debt relationship with someone. One of the nice aspects of the MCA is that it's a fee. So it's not an interest rate, which means that you can bake that fee directly into your margin. So if you buy a certain amount of inventory for 100 grand and we're going to put 10% onto that, that margin is just going to be 10% taken your margin, which means that you can plan your inventory or plan your cash conversion cycle much easier and with a lot more certainty.
That's a really interesting platform and offering for e-commerce folks. How long have you been a customer of Entropy? Give me a little bit of the story there and where this comes to play into your platform.
Yeah, so I met Nare and Ilya nearly 2 years ago when they were just starting out, and Wayflyer was about 2 years, or about 18 months, 2 years into its life as a startup. So we actually share an investor, and that investor put the CEO of Wayflyer in touch with Nare, and then he put me in touch with Entropy, because I was the man who's doing all the work around how we do ingest and use banking data from our customers. So when we first met, their product was very early on. It was just a demo. It was just a prototype. I think the API maybe hadn't even been released yet. And then when there was only one endpoint that you could ping, which was the enrichment endpoint. I don't think it was synchronous at that point. And we actually didn't start using them in production for another 6 to 8 months, because at that point, me and my team had been building the same technology internally, which was essentially transaction classification and the named entity recognition or entity extraction from banking transactions. Now, I thought I was good at my job. I'd done this very similar sort of built very similar technology in United Health Group for medical charts, and I thought I knew what I was doing. When I met Ilya, and he was kind of talking me through what they were doing and how they were doing it, I realized that they were way ahead of us. And we had a lot of data, or at least I thought we had a lot of data. I think we had a few million transactions, and maybe a few tens of thousands or a few 100,000 transactions had been annotated by our team here, and they were blowing past us. And even the quality of the data that they were getting, and they were getting it from many more sources than us. And then the features that they were adding to their product. Eventually, I realized that there was no point in us trying to do it ourselves anymore, and we migrated over to Entropy last year.
Okay. So in looking at Wayflyer and describing what you do, and it says on the website as well, it exists to provide funding and insights to e-commerce companies, right? So they can grow faster and achieve their potential. Why focus on e-commerce? Why just niche to that specific customer?
The founders of Wayflyer are two guys called Jack and Aidan. And essentially what Wayflyer was born out of was Aidan had a company that had developed an analytics platform for e-commerce, essentially pulling multiple different sources from marketing, shopping into one place so that you could analyze your e-commerce business in a single place rather than across multiple fragmented platforms. Jack at the time had been working with e-commerce and DTC brands, and he could see that there was a real issue with DTC brands accessing finance, especially when they could have had a brilliant business, loads of demand for their product, but banks weren't interested. So the two met, and Jack pitched to Aidan, stop doing pure insights and let's start doing finance, let's start doing funding. Wayflyer was 6 months in, and COVID hit. And COVID was the biggest boost for e-commerce, for the e-commerce industry ever. Everybody was stuck at home and nobody was spending any money outside of, leisure, travel, anything like that. So they were spending a lot of money on goods, especially from online luxury goods and clothes. So all of these businesses all of a sudden had huge demand, had no access to capital in order to grow, and Wayflyer was there ready to go. And that's kind of how Wayflyer really started and how we grew so quickly early on. Now, other competitors are starting to come in and try to work with financing e-commerce stores, but it's harder now because COVID is over. But it's still a growing industry. About 16 or 17% of all retail in the US is e-commerce now, whereas 10 years ago it was only something like 7%, and it's still growing by 1.5% a year. And these businesses still have the same issue, which is access to capital at a good rate, finance products that suit their needs. And these are all stuff that banks or traditional inventory finance or PO finances firms don't do.
I think that's fascinating. So there's a little bit of timing there with COVID. There's a little bit of the market and the growth there in e-commerce. I think that's really, really interesting. Okay, let's switch over to some AI conversations, some machine learning conversations. Generative AI and LLMs are the talk of the town right now. Like, they are the hype that's in the headlines, right? So are you using any of these approaches within Wayflyer, or are you seeing any use for your offering? And if so, how?
Yes, in some ways, yes. Now, we're not trying to develop some sort of product similar to ChatGPT equivalent. Triple Whale released one recently. Shopify released one last week. We're not thinking about how we can use LLMs as a product offering. But what we do use is LLMs internally as we consume the output of them. So the big one, obviously, Entropy's model is an LLM. And we use that for every single customer, every single transaction that we consume. We put through Entropy, and that gives us this very rich structured data to build other processes on, particularly our underwriting process. And that's got the same use case over and over again. So we've got the big benefit for LLMs within the finance industry, in my opinion, is turning unstructured data into structured data. So you can put them into processes where you are either using them for risk assessment or using them for general application like processing. Transactions from Entropy is one example. We're doing stuff with products, for example, customer products. We get access to all of the descriptions and titles and images from our customers' products, and we can use them to do stuff. We can use LLMs to do stuff like predict what industry this customer is in, and then we can use that industry to do something like customize how that customer engages with us, maybe through our outbound. Maybe we say, so we can specifically talk to them via, if we were to pitch to them, we say, oh, it's great to see you're in this industry selling this product. Well, we also funded these customers that also sell similar products to you, and look how well they're doing based off of the funding that we were able to use them to grow, et cetera, et cetera. And I think what we're going to start to see similar use cases within accounting data. When we get accounting data, a line item within an account is called a general ledger. We use that to predict what general ledger that account should go under, or what kind of like headline that accounting line should go under, so that we can use that within our analytics for analyzing the business performance of our customers. That's really, for us, that's the key. The thing here is it's all about efficiency. And when I mentioned unstructured data to structured data, the alternative is people manually doing this work. And that is really what most big finance firms are going to start using these things for. They're going to start using them to try to automate large amounts of manual data processing, or trying to essentially turn applications that couldn't talk to one another into applications that can talk to one another. So, you can think of the API-ification of a lot of like software and products and finance products as well. But there's still all of these things that just don't work internally and that people plaster over, especially spreadsheets. So somebody, and maybe it's going to be Entropy, or somebody's going to come up with some amazing spreadsheet formatting / structuring LLM that's probably going to dominate the finance world for the next 10 or 20 years until, I don't know, we work out what the next thing is.
So I get what you're saying with, it's all about automating some of these things that have manual steps, right? It's all about removing the human element. And I think from that, I could extract maybe an answer from my next question, but I'm curious about what matters to your customers. E-commerce, businesses, are people expecting this funding process to be like a giant easy button, like to be super magic, or do they have, lower expectations given what they've had in the past? Tell me a little bit about that.
I think the standard for finance applications is, especially from the business end, is getting like much, much better. If you think about what it was like to apply for a personal loan in the past versus applying for a personal loan today, maybe, or a credit card today, like a lot of that stuff is on demand. So you could apply for something and, you click a button and all of a sudden you've got access to a new credit card or new credit limit or a loan or a home loan or whatever it is. Business lending and business finance solutions have been very far away from that. Typically, you're dealing with like big clunky institutions or small scrappy businesses that are typically spreadsheet ran. You're talking to a lot of people. You're going through an application process that is probably via email or over the phone. But people expect, personal finance. Once you have that experience, you think, why can't my business finance be like that? Wayflyer, I think we're trying to get to this experience that is no touch, low touch, with the human element still involved, because finances are really, really personal, even if they're business finances, especially for small businesses or businesses that are still run, like, the finances are still run by the founder or the co-founder and so on. So what we're trying to do is we're trying to make it so that the technology allows us at the back end to do things super efficiently. We minimize the amount of back and forth we have in with you. We want to minimize the amount of questions you have to answer, because we can talk directly to your source systems. You're giving us an unbelievable amount of data, more data than any bank could ever get from a typical business. And what we're still trying to do is give you somebody that you can talk to on the phone, have a personal conversation about, understand your needs, make sure that the financial solution that we're offering you meets those needs or exceeds them, while still making the experience, quick and risk, make sure that we are managing the risk on our end. And ultimately, there's two purposes for collecting data within an application process for financing. And it's trying to understand what the financial need is and trying to then estimate the risk that giving somebody a loan or an MCA might expose Wayflyer to.
Okay, so my next question is, a little bit more around fintech, right? And fintech, from the normal, let me say the normal standpoint, but I guess maybe the most heard of standpoint is the software layer on top of finance. But what Wayflyer is, or at least from what you're describing, it's really the software layer in the back end of finance. What you're building is making that process lowered risk, using data, making it faster, removing the human element. Is that software layer going to make this better for Wayflyer and for, other businesses that are utilizing this sort of back office processes? Tell me about that.
So without a shadow of a doubt, I think this is essentially the competitive edge of the 2020s is going to be businesses that are able to leverage vast amounts of data effectively. And the only way you can do that is by using essentially a whole framework for data processing, which includes machine learning and, talking about how we use entropy today. At some point, entropy will be as good or better than any person could be, any individual could be at that job. It'll do it across many languages. It'll do it near instantly. It'll know more than one person could know about banking transactions and merchants. And how can other businesses compete? How can traditional businesses compete with businesses that can leverage that type of technology within their own processes? Even if you think about from the risk management perspective, a lot of banks or a lot of lenders, they have no ability to use the information from their bank transactions. They might use basic statistics like how many credits and debits are there, what's their average bank balance through time, what is the lowest amount of cash that they've had in their account in the last 6 months. They're such rudimentary data points to use within your decision-making process. That is a competitive edge in and of itself for us in Wayflyer. It means that we can have a much richer view of our customer and use that within a whole system and use it across different parts of the system as well. Maybe it's not just underwriting. Maybe you can use it within finance. Maybe we can use it within the offering that we make to our customer. It's all sorts. And then I mentioned APIfication of software. Wayflyer is essentially built on APIs. Lots and lots of jobs have been broken down by other people who are much smarter than us, and they've worked out how to do something really, really well. And they've given us the means to hook into that. We use Stripe a lot. We use GoCardless a lot. We use Entropy. We use integrations with Shopify, with Plaid, with Oculus. Because we can buy into using those services as a pay-per-use. We don't have to have this massive upfront cost in order to develop some huge piece of technology that we probably wouldn't do very well and that's out of our core competency. We can leverage, other people's technology and we can pay them per transaction or per gigabyte or, per unit of whatever the thing is, which makes it cost effective for us. And they will do it better than we ever will do. Wayflyer is 4 years old. There's other people who are 1 or 2 years old. People are coming up with financial products and financial service offerings that would blow a traditional business out of the water because they can leverage data and they can leverage services like that.
Super fascinating. And I love the term that you use. I use it often, the APIification of things and how that is enabling innovation. So with Wayflyer and with your customers, how do you prioritize what is important? And I think that's more of a roadmap question. Through different things that you've said, I could pluck out maybe where you're going to go, but I want to hear what you have to say there. How do you prioritize what is important for e-commerce business customers?
Look, I'm coming from kind of like the back end of Wayflyer and mostly around our technology for underwriting, for risk management and risk modeling. When we think about our customers and then and what we prioritize for our customers and then what we prioritize internally, our big focus, if we can do things really efficiently, we can service more customers. If Wayflyer has a certain amount of deals we can do in a month because of the capacity that we have, we then have to decide, okay, let's focus on this section of e-commerce. Let's focus on these types of customers, these size of customers. The way we prioritize internally is, or the way I think about it. Now, other people have different roadmaps that they might prioritize for making the customer experience super smooth, making sure that the sign up, the contract signing, the disbursements and everything are really good. But what I think about is, how do we make the process as efficient as possible from the back end? How do we make sure that we fall within any of our risk thresholds so that we can fund as many e-commerce stores as possible? There's over 400,000 Amazon sellers in the US. There's over 1 million or 2 million Shopify stores in the US. There's many, many more in the world. And we still only fund a very, very small percentage of them. So what I'm mainly focusing on for our roadmap is things like data integrations with things like Entropy. Our internal process for turning all of that data into analytics and dashboards, monitoring of customers, any of the technologies that we need so that we can scale Wayflyer to the point that we'd fund 1 million customers, or we could fund 10 million customers if there was ever 10 million e-commerce stores to fund in the world. And the big thing is a finance product is a commodity product. It is just money. Our customers come for us because they need funding to grow their business. we don't want to get in the way of that by trying to make anything complicated or make them jump through hoops. We want to make sure that we give them the funding that they need to solve their problem at a good price. And then the way Wayflyer will succeed is by doing that for as many customers as possible.
Okay, Daniel, last question. And this one, I'm really interested what your perspective is here. What is the real impact of AI going to be on finance? In your eyes, you're in this world, you're in this industry, you're providing an amazing service and amazing capital for e-commerce businesses. Where is AI really going to impact this industry?
It's going to turn the thing upside down, I think. One is finance is typically dominated by the big players. The big banks across all of the countries that, they've been around for a very long time. They've been around through all the tough times where all their competitors have died. Think about, the Great Recession, or even this year in the US, SVB went down. In Switzerland, Credit Suisse went down. They're gigantic businesses, but they don't innovate. They're massively robust, but they stall in terms of innovation and offerings. The way I see it is AI and software in general is going to enable people to start targeting specific products, specific niches, and take on the incumbents in a way that it will probably be fairly radical, I think. Like before, people had to go to their bank in their town to get a loan. Now, some internet bank could give you a loan near instantly, and they could probably do it at a better rate, quicker than you having to go down and fill out a bunch of forms in your bank and maybe hope somebody gives you a buzz back afterwards. So I think mostly it's about competition. It's about people being able to come up with new services and offerings that they can turn into businesses quickly. Like the competitive edge that we can gain by using a provider like Entropy is huge. And it'll take a very long time for banks, if ever, they be able to graduate their processes internally to use something like an LLM to enrich their transactions or to do even more.
That's fantastic. Great answer. Well, Daniel, I really appreciate you being on the show today. I've learned a lot about Wayflyer, about how you're using Entropy, about a different area of fintech that I don't normally get exposed to with the funding side, how you're fueling the growth and the success of e-commerce businesses. Really appreciate you being on the show today.
No, thanks so much for having me.
What a cool conversation with Daniel at Wayflyer. It's interesting to see how the company is changing the game with the funding experience for e-commerce businesses. It was also solidifying to hear another perspective from the back office and how AI is going to continue turning finance on its head. As a reminder, you can learn more about Entropy and get started enriching your fintech transactions today by visiting entropy.com and clicking Start Building. And thanks again for listening.